right time.
Hello and welcome. You're watching Countdown. Well, the markets are trading just about flat as we speak. Nifty is around the level of 10,556. So it's off days high. Remember, throughout the session, it's been a range-bound session that we've seen for Nifty. In fact, what is dragging the Nifty lower in today's session is the Bank Nifty. Remember, that's the one which has been underperforming in the last 2 to 3 sessions. Bank Nifty currently trading with cuts of 85 points. Remember, we are getting some support from heavyweights like ITC, which has surged nearly 4% in today's session. Despite of that, the markets are just about trading flattish. ITC is trading around the mark of 276 with gains of 3%. I want to pull up the contributors list and check which are the stocks actually which are dragging Nifty lower in today's trading session. So it is the HDFC twins which have maximum weightage of 16 to 17%. Both of these stocks are trading in the red. The other heavyweight, Reliance Industries, is also has seen a bit of losses. But look at ITC gaining 3.5%, contributing nearly 20 points. Infosys, which was trading lower for the last 2 trading sessions after the numbers came about, has seen some bit of respite in today's session. And the other IT major, Wipro, is trading in the green alongside Bharti Airtel. In terms of themes, what is working out in today's trading session? In fact, for the second straight day, we've seen some gains coming in for the hotel stocks. There are reports suggesting that the occupancy rates in the hotel industry has been improving, and whether the pricing power is coming back to this industry or not, we'll find out from our management who joins us now. We've got the management of Royal Orchid, Mr. Amit Jaiswal, who's the CFO at the company, joins us now. Hi, Amit. Good afternoon, and thanks a lot for joining us. There is a lot of euphoria around the hotel stock since the last 2 trading sessions. News of occupancy rates going up. Could you confirm the same for us?
Yes. See, you are right that last few sessions we have been seeing that hotels overall the industry is doing well, and believe me, this is happening after a decade. Last decade hotels were not doing that well, but over last 1 year period we have seen a great improvement in the the occupancies of across the hotel, and the leisure hotels also have started doing very well. And we are now sitting at an occupancy of 75+% over and above and the industry also is sitting at almost 70% occupancy. So things are looking great going forward.
Amit, you said for industry the occupancy rate is 70, and for a company like yours is almost 75%. Correct me if I'm wrong. Going into FY19 now, do you see this 75% rate inching higher?
We are quite confident that in FY19 we will be crossing 80% mark.
Okay, and if the occupancy... Go ahead.
No, because the demand has grown, whereas and it is overriding the supply. The basic reason for this is that the demand is now overriding the supply. So things are looking great and occupancy levels are going to go beyond 80% now.
The other big question is that if the occupancy rates are going up, are we also seeing some bit of pricing power coming back to the sector? Have you revised your average room rates?
See, what happens, unless and until the entire market does well, it is difficult to increase the prices. And yes, we have started seeing the improvement in the prices, but this improvement was not that great in last financial year. But we are very confident that the current financial year, the average rates are going to go up by in a range of 8 to 10%. And primarily because now the competition also is sitting at 70% occupancy. So this is the time when we can increase our rates and things they are going to yield results.
And what was your ARR rate in FY18 if you're expecting an increase in FY19?
FY18 we were in the range of 3,800 across all the hotels put together. Some of the hotels are doing very well. But at the same time, it averages out to around 3,800, which we will see at least 8 to 10% growth in the current financial year.
Okay. Is it possible, Amit, to predict or forecast demand or occupancy rates for a year at large? I'm just trying to get a sense. You might be having a really good period right now.
See what happens in the beginning of the year, we budget which we have done. So we are forecasting almost 80% occupancy. But what happens if you really look at how the hotel business works out is that 50% of my business is closed at a rate which we have finalized last year. Okay, it goes on calendar year, the RFPs and the corporate rates. So again the corporate rate change will happen sometime in January. But as far as the 50% inventory is concerned, which is on the open market, which we sell through the groups and EMC and blah blah places, there we will see an increase in the rate, which may be more than 10% also.
No, Amit,
but the average is out to 8 to 10%.
No, Amit, let me qualify. I didn't mean the rates. I meant the occupancy. The occupancy levels, which are
occupancy now we are at 75% and it will go to 80%.
No, my question to you is precisely that, Amit. My question to you is this: that right now, when either the business travel or the tourism travel is very strong, and you are at about 80% or 75%, whatever the number is, we're in the month of April. Is it possible in your industry to forecast what will happen for the next 11 months on occupancy?
Yes, we can forecast. We can forecast to the accuracy of almost 95%.
Wow, and you believe that occupancy will touch 80% for FY19?
Yes.
Couple that with, okay, so then the question is, couple the higher occupancy, fairly impressive numbers, I'm very happy for you and your shareholders, and the ARR uptick that you mentioned about 8 to 10% that you believe could come in, maybe higher. What does this mean for financials? Because if these are the numbers that you're talking about, operating leverage would kick in a very big way.
Yes, that's what, if you really look at our results quarter on quarter, you will find that there is a good improvement in the bottom line. Our top line may not be growing that great, but our bottom line is constantly improving, and this will continue to improve because of the two factors. One is that whatever our owned JLO hotels, these assets, we will be getting extra revenue, out of which almost 70% goes down to the bottom line. Plus, what is happening, we have signed a lot of managed contracts also, and we continue to do that. So those additional incremental fees will also go to our bottom line. So our bottom line is tend to improve if the trend continues like this, then our bottom line will be very stronger on quarter basis, which you will see in the current financial year.
Amit, there was a substantial improvement in your EBITDA margins in the December quarter of almost 24% vis-a-vis the rates of 18 to 20%, which we've been seeing in the previous quarters. Will you be able to sustain this kind of run rate in the coming quarters?
Absolutely, we are going to sustain because we have worked a lot on our cost optimization. We have, cut down all kinds of frills, and the target is that to create, more profits and value for my investors.
So can we expect margins in the territory of 24 to 25% for FY19?
Yes. EBITDA margin is going to grow, and we are very confident about that. Unless at least something, industry, something happens like, some odd incident happens, things are looking improving for next 3 years. We can forecast that things are going to be great.
A word on your expansion plans, Amit, going into FY19, any new properties that you're looking to launch?
Already we have almost 6 property in the pipeline, which we are going to open it, and we are very aggressive as far as tier 1, tier 2 cities are concerned, and our roadmap is that another 40-50 hotels we have to open in next 3 to 4 years time.
I would presume by whatever you are saying that your Q4 numbers would also be looking great. I know you might be in a silent period, might not be able to talk everything, but you reckon that the operational improvement would have been quite spectacular in Q4?
Yes. The operational improvement has been very spectacular. In fact, we have done a lot of revenue management. Once your occupancies are going beyond 70%, the revenue management kicks in, wherein you take decisions on which business to take, which business to lose, what is the segment-wise, each source-wise, what business you are picking it up at what rate. So all those things working, we are doing it, and we are, inching towards getting greater heights.
Okay. I don't have the numbers offhand, Amit, but what would the debt situation be at Royal Orchid? And with these numbers, what are you planning to do with the debt?
See, right now in standalone, our debt is at almost 36 crores and the consolidated debt is around 76 crores. See, with these numbers coming in, we will definitely be able to reduce our debt. Probably we are looking at doing some leases with this additional cash flow which will come. We are trying to take over some leased asset which will add, which will increase our top line also, as well as it will add to the bottom line. So a lot of things are there on the card. Probably in the next ensuing board meeting, that is the year-end board meeting, we'll be presenting it to the board for a roadmap that what way we are going to go going forward.
Did I hear you use the term additional capital? I mean, are you into a capital raising mode?
Additional cash flows, cash flows which come. Yes, additional cash flows which are now we are able to see it. With that, we are also looking at taking some leases because our top line is not growing. Unless until I get some hotel of our own, my top line may not grow that much. So we are looking at some leases which we want to take over so that our top line also grows at par with the bottom line. And these leases are going to yield a lot of result for the bottom line also.
Okay, but last question, Amit, from my end. Again, not an exact number, but more a ballpark estimate. FY19 over FY18. Is there a base run rate that you anticipate on the top line? Forget the bottom line. It will be a factor of a number of things. Just the top line.
Top line, I am very confident that we should be able to add at least 15% on the top line. That these are the estimates. It is very too early to say confidently, but we are quite confident that the things which are going on in the industry, we should be able to add at least 15% on the top line.
All right, Amit, we'll let you go on that note. Appreciate you joining us and taking us through the trends that are emerging in the hotel industry. And clearly, so we can see the reaction coming up for the stock prices across the board for the hotel stocks. Amit of Royal Orchid, who's the CFO, clearly mentions that he expects the average room rates in FY19 to go up by almost 8 to 10%. The pricing power seems to be coming back to the industry. And he also mentioned the EBITDA margins for FY19 can hover somewhere between in that range of almost 24 to 25%.
There's a bit of a surprise element going on these days. 2 days ago, we were talking to India Cements. Very optimistic commentary, more positive than what we were thinking of. Today, Royal Orchid, yesterday we were working with numbers of occupancy rates of 70%. He's talking about 80%.
So he said their occupancy rates are higher than the industry occupancy rate of 70%. He said they're operating at 75%.
Yeah, and nudging 80%, right?
For FY19, he said they look at crossing that mark.
Yeah, so, hotels don't really form a part of high frequency indicators from an economy perspective, maybe, or maybe they do. I'm just saying that there are a lot of indicators which point towards there being a positive surprise coming up. At least the managements at the beginning of Q4 seem to be speaking that language.
And it's surprising, Neeraj, because we've seen this industry not doing well in the past few years. We've seen, the hotel segment of ITC started to improve in the last few quarters. We've seen that improvement coming out. Maybe there is some structural change which is taking place in this industry, which has been suppressed, I think, since 2008. I think that was the time when the occupancy rates were somewhere about between 60 to 65%.
Yeah, well, this should be interesting. Let's wait and watch what happens. The hotel stocks have been on fire. I don't know if Hadrien Mendonca, our next guest, who's got some interesting charts, has some hotel stocks with him or no, but he's in conversation with us in our studios. You've seen him often on Bloomberg Quint. After the Diwali show, for the first time, Hadrien back in the studios. Hadrien, good having you. Thanks so much for joining in. Let's talk about charts. And I presume you want to show some long-term charts out here and try and give us an indication of what our charts saying about specific indices. Okay, let's start off with the Nifty. You've chosen a weekly chart. Tell us what's the relevance of this and what would this indicate?
Yeah, so as you can see, the weekly chart that we've seen, it's a one-year chart that we are trying to map here, and you see every top is higher than its previous top and every low is higher than its previous low. Now, very interestingly, if you see this low and if you see that low coming
sorry, Hadrien, I'm just trying to figure out, if you qualify this and this as a top and maybe this as a top, you are saying that tops are showing a trend of moving higher.
Absolutely.
Okay, fair.
And similarly, we're seeing this low, and this low. Yes, absolutely, yeah.
Okay.
So they're trending higher. Okay. So that's the higher top, higher bottom structure that we always speak about. Interestingly, the 10% fall that we've seen in the Nifty has actually come to a halt exactly, near its previous low. So this
you're talking about this one.
This point.
Okay.
Okay. So we've not actually exactly breached it, which is a thumbs up for any bull run that's going on.
Okay.
So we are absolutely in the bull run. There is no doubt about it. So we take a reevaluation only if we breach this low now.
Okay.
So we continue to play the momentum. One more interesting thing that I want to point out is 1, 2, and 3. So this week is actually still moving on.
Right.
Friday closes. So if we close at the week's high, this qualifies as the 3 white soldiers. So 3 white soldiers are actually the base before we shoot up even higher. Before that shoot up, there is always a trend that we see a phase of profit booking. So we are expecting a little bit of profit booking around here.
If we have 3 white soldiers.
Yes, that is if the Friday's closes near the week's top, that will qualify as the 3 white soldiers. So post that, we expect a little bit of profit booking, a little bit of sideways move before which we launch into the next phase of upswing.
Okay, that's interesting. And you will be here to tell us whether or not that event has happened.
Absolutely, I will be.
So on and so forth. Okay.
Yes.
I mean, by here I mean on the BQ platform.
Yeah.
Okay. So this is the Nifty. That was Nifty, and now the Nifty Bank. Is it trying to show a similar trend, Hadrien? Why have you chosen this chart?
Yes, absolutely. So Bank Nifty is like almost financials are 40% of Nifty. So Bank Nifty is absolutely doing same what the Nifty is doing. So again, Bank Nifty has led the fall. But Nifty has followed. So Bank Nifty is once again trying to lead the curve before we make that profit booking phase I'm talking about. So this we need to close near week's high.
Even then there will be 3 white soldiers on the Nifty Bank too.
Absolutely, yes.
Hey, I'm learning technicals, Navneet.
If we don't do that, things can be a little, strange, because then we'll see a phase of profit booking definitely coming.
Okay.
Just a question there. Now this is obviously over a period, a weekly chart, but if I look at just this week, Bank Nifty has been underperforming Nifty, and as you rightly said, 40% of Nifty is actually based on financials. So for Nifty to scale higher, there has to be some contribution to come in from the Bank Nifty constituents.
Yeah, absolutely. So as I said, banks have always led. So when I'm saying the profit booking phase, so Bank Nifty is already showing that, because if you see, we've already seen Bank Nifty turning out to be the big laggard. If you see this week in taking the perspective. So if we don't see the Bank Nifty coming up, so the likes of IndusInd, Kotak and ICICI, I don't think so, we'll see that phase going higher rather than seeing a phase of profit booking.
We've got something like ITC moving higher now. Do you think that can change the game?
Yes, absolutely. There's a lot of shift happening. So a lot of conservatives are outperforming. If you see Britannia, if you see HUL, and ITC is coming into the picture because a lot of people are thinking it's undervalued. So I think it's high time ITC also plays a catch-up. And Yeah, ITC is supposed to be the one that you should have if you have a medium-term perspective, because it can shoot up another 20-25% if I'm not wrong.
Cool. So, and then, so that's the word on Nifty Bank and some heavyweights. Interestingly, you've chosen the Nifty Realty Index. Why this one?
Yeah, I suppose the data is a little less, but you know, if I can explain the Realty Index here, if you see another year's data, we have seen a very beautiful breakout on the Realty Index, and this retracement that we have seen is exactly the breakout zone which it actually touched. So we have retraced the whole breakout, and the Realty Index has also broken out from this falling channel.
We've come back to these levels.
Yeah.
Right?
Exactly, yeah. So we've come back to these
broke
levels.
out, you're saying, from October.
Yeah.
And then we've come back.
Yes.
What does this signify?
We have retraced the whole move, which is very important for a bull run to sustain, because if there is not going to be any fall, it's going to be difficult to move higher. So this is what has made space for the next bull phase for the Realty Index, and this falling channel that we've seen is broken out on a weekly basis. So this is another thumbs up on a Realty Index. So you know, the likes of DLF, the likes of I can't say an HDIL, but DLF and Oberoi Realty and Godrej Properties, these three should be the preferred picks because they look pretty stable, and I think one can concentrate on these three rather than the Unitex and HDILs of the world.
Okay. The last chart that we want to show today before we move on to today's stocks is the Gold Bees chart. Why this one?
Yeah, so this is a very interesting thing happening, interesting asset class coming to live altogether. So if you see the gold international prices, they are actually just going through this congestion zone. So once we see that breakout above that 1345, 1365 zone, I think Gold Bees is going to be the biggest beneficiary because it follows suit. So Gold Bees, in fact, on the weekly charts is already broken out, and that's leading. So we'll have to wait and see, because if gold doesn't break out, then I don't think so this will continue on the upside. So we'll have to wait. But Gold Bees is something, I think we spoke about Gold Bees previous week also, was one of my interesting picks, and I think Gold Bees is already broken out. So I think something to watch out for.
Okay, interesting. So on long-term charts, watch out for the index, watch out for 3 white soldiers at the end of this week if this does come about. And then, of course, some of the others. Hadrien, thanks for taking us through what the long-term charts are suggesting. But it's almost 2:30, you're actually slightly past 2:30, Navneet. So let's focus on the day now.
Yes, Neeraj, let's get some technical ideas going from our experts. I'll get back to Hadrien. For the time being, we've also got Ruchit Jain, technical analyst at Angel Broking, who is joining us on the show now. Hi, Ruchit. Good afternoon. Appreciate you joining us right now. What's the call on Nifty? Today has been more of a lackluster trading session, a range-bound session, still hovering around the mark of 10,550. We've seen some bit of momentum coming back in the second half of the session for last 2 days. Can we expect Nifty to scale higher from current levels?
Very good afternoon, Navneet. Navneet, if I just see the positional charts, already since last 12-13 trading sessions, we have seen a decent up move from the lower levels of around 10,000. Now the thing is that if I look at some positional charts since the month of January, February, then this 10,600, 10,650 range in the month of February had acted as a very strong resistance, from where we had seen a sell-off right up to 9,950. So somehow already the easy move which was there, the easy up move or the swift up move which we had already seen in last few trading sessions is now behind us. We are now headed towards a strong resistance of this 10,600 to 650 range. So we are expecting minor up move to continue, but I think that would be maybe about next 60-70 odd more points. But I think this, for positional traders who have who have created long positions in stocks or in the index in this up move, it's a good time for them to start booking profits in this 10,600 to 10,650 range. Only if we see a sustained move or a breakout about 10,650, then one can re-enter the markets. But as of now, it is wise to start booking profits on the existing long positions in the market.
Okay, book profits is the call at current levels is what Ruchit is suggesting. Hadrien, since we've already spoken about Nifty Bank, Nifty weekly charts, let's talk about your individual stock ideas for the day.
Yeah, so Sun TV is the first stock that we are pretty bullish on. We are seeing a symmetrical triangle breakout on the charts, and I think it's the right time to enter Sun TV. One can play for a target of 928 and keep a stop loss at close to 891. The second stock that I'm bullish on and could be one of the small bargain buys that I'm really expecting to work well in going forward. So Bharti Airtel is one stock that is really looking good. We are seeing a double bottom kind of a formation on the daily charts, and I think this can be one of the preferred picks going forward if you have a week's perspective. So one can buy for a target of 402 and play with a stop loss of 384.
Okay, so those are the top two picks coming in from Hadrien, and actually the media pack is doing pretty well as Hadrien has a call on Sun TV. We've got the Nifty Media Index, which has gained nearly 1.8 to 1.9% in today's session. Ruchit, you too have a buy call on something like Z for today's session.
Yes, Ronit, I have a buy recommendation in Z Entertainment. We have seen that in last few trading sessions, the prices have consolidated above its 200-day moving average. And today in the morning, in the first hour of the trade itself, we had seen a significant volume coming in and the price is giving a breakout. Although during the entire trading session, then the stock had consolidated. But looking at the daily chart, I think this is a start of a fresh up move. We can expect some good outperformance in Z Entertainment from current levels. So from a short-term perspective, one can create long positions at current levels, keeping a stop loss below 569, expecting target around 625.
Okay, those are some technical calls coming in from our experts. Let's also bring in Dipan Mehta, member of BSE, who joins us on the show now. Mr. Mehta, good afternoon to you and thanks a lot for joining us today on Bloomberg Quinn. Good afternoon. Besides the hotel stocks, we've got the FMCG pack now, which is buzzing, and a lot of the technical analysts are also of the view that the bets on the defensive space is only going up. We've seen stocks in the mid-cap IT space inching higher. Even the FMCG pack, the Nifty FMCG index is up nearly 2% in trade, especially after the forecast for monsoon has come in as normal. People are waiting for that recovery in the rural market, which may aid the recovery for these FMCG companies as well. Is there anything in this pack that is looking interesting to you?
Yeah, I think the domestic consumption story is a very powerful investment theme. And of course, one of the ways to play it is through FMCG. But overall consumption patterns are changing, and we are of the opinion that the more growth may come through in sort of new generation industry like say aviation or retail for that matter, building materials, appliances, certain select hospitality businesses. I think that's where the consumption spending is rising. These industries are having higher growth rates than the traditional FMCG businesses. And although they are expensive on a trading 12-month basis earnings, but I think they have a great future going forward, given the kind of opportunity and headroom for growth that most of these sectors I mentioned just now do have going forward. So you could pick up the market leaders in each of these segments. And there's of course the auto industry also, which is which is also driven by consumption trends, and build a good portfolio around consumption-oriented stocks, which could be defensive at the same time, could be growth-oriented as well, considering that a lot of the consumption-oriented stories in India have a reasonably de-risked business model.
Dipan, what have you made of the premium valuations? I know you in part have answered that, but I'm just trying to wonder, the same question that I'm asking to a lot of people. I'm asking that to Ashwath Damodaran yesterday as well. The kind of premium valuations that some of these staples are now starting to enjoy almost as a perpetuity of sorts. I mean, you would see premium valuations coming in, say, for an HUL from a 3-year trend of 44 odd or 45 odd times to maybe moving to 55, 57 odd times, but then coming back. The last few months, the last 3 or 4 months at least, if not more, we're seeing these stocks now starting to have a 50, 52, 55 times P multiple almost quite regularly and sustaining. People are happy to buy them at those levels as well. Why is this happening?
I think there's scarcity value for these businesses, and a lot of these businesses, the volumes have been pinned down for some reason or the other, demonetization, GST, overall soft rural demand, and some of those dynamics are expected to change. Base effect also benefits these companies. So Street is expecting higher growth rates for these companies, which is why I think the PE ratios are being bid up per se. And also at the same time, I think, in terms of options available to buy such consumption stories is limited. And as I said, scarcity value is an important aspect. They have been great in terms of creating value for shareholders in the past, and therefore have a very loyal investor base, which ensures that the price is always on the higher side. And this has been true for many years. And although you should not factor in an expansion of the PE multiple, but at least whatever earnings growth will come through in these companies, your stock price returns will be more or less equivalent to those earnings growth.
Mr. Mehta, we've seen pockets like hotel companies, even the media pack, some appreciation in stock prices coming from these sectors as well. Do you see any sort of improvement in the earnings in the coming quarters from these sectors?
Yeah, absolutely. I think the real highlight of this phase of the bull market, and we have seen a correction and revival of the bull market, is going to be the growth in earnings. And it will start as early as this earnings season, which is underway. And we will see that across the board, many industries will report excellent numbers, in our opinion. And it's to do with various factors: consumption, rising government spending, uptick in the capex cycle, could be higher spending on infrastructure, considering more highways are being built, and could be even power-related businesses, power equipment, especially distribution companies doing well. So I sense that many industries, maybe with the exception of, say, sugar or maybe pharmaceuticals, which are focused on the export business, you will see across the board growth in earnings in many sectors. Some of the cyclical businesses also are turning around pretty well, the likes of metals and some of the softer commodities. So I think that there's going to be a great period as far as earnings are concerned. And a lot of the kind of fear which we have as far as earnings are concerned, or as far as price to earning multiples are concerned, that may get addressed if the earnings overall rise, and that could lead to a minor, compression of the price earning multiple. So that's the underlying, trend, I think, which will drive markets higher. And then, of course, there are various risk factors, that being political, I think the prime one, and also any turbulence which may take place in the global markets on account of, say, trade wars or any such steps which may be taken by the President of the United States. So there's some fear factor on those counts. But by and large, the underlying fundamentals of this bull market remain intact, and in fact only have improved over the past few months or so.
What do you expect, Dipan? Two mid-cap IT companies coming out with numbers today, TCS coming out with numbers tomorrow. I don't think Infy is probably an indication of what the space could do. What are your expectations?
See, when we look at investing in companies, it's like with a 2-3 year outlook, and we don't see that kind of visibility as far as software companies are concerned. And we could have an outperforming quarter for software companies. They could do well this quarter, maybe next quarter. But the medium to long-term trends are not that great for software. The kind of disruption taking place in the industry, especially the kind of pressure that traditional IT services businesses are facing, that's not getting compensated by new businesses coming in from the digital side. And the statement or the kind of strategy of Infosys to try and gain more business at the expense of margins, I think that's going to be the trend for the Indian IT industry going forward. Whether the industry admits or not is a different matter altogether. Which is why I think our view on IT remains negative at this point. I do understand that IT has done well over the past 5 to 6 months or so, and have really shown a decent turnaround. Maybe the earnings also will follow through. But from a long-term investment perspective, we are not that bullish on IT companies. And as I said, I think there's no visibility as far as growth rates are concerned. We saw the NASSCOM projection at 7 to 9%. And in our opinion, for many years going forward, this industry would grow at best at a high single digit. And when you have a whole host of domestic-oriented businesses, NBFCs, private sector banks, which are growing in the range of 15 to 25%, I don't see much sense in investing in businesses which at best the growth could be a high single digit. So that's basically is my assessment as far as the IT industry is concerned. And the rupee depreciation is now, not something that they can bank upon. At the same time, costs keep on increasing for IT companies because of their domestic expense base. Could be increments, it could be higher administrative charges, rent, power, electricity. I think these costs keep on going up, and they have the inability to pass on increases of such costs given the pressure which is there and the competitive intensity. So overall the view on IT is negative. There could be a few outliers, and with usual disclosure that we and our clients are interested, Tata Elxsi could turn out to be an outperformer, but by and large we have a negative view on all IT companies, large as well as mid-cap.
Okay, that's the view on the IT pack. Just want to address the markets. There's been a fall on Bank Nifty. It's now down almost 180 points. So when we started the show, it was down only about 70 to 80 points. The Bank Nifty is now trading with cuts of 188 points. And both the Nifty PSU as well as the Nifty Private Banking, both these indices have seen a sharp fall. Let me just address a few stocks from the banking pack. You've got Bank of Baroda, which has lost almost 4% in trade. Something like Indian Bank, Andhra Bank, and also your heavyweight. Remember, on this index, State Bank of India is now trading in the red. Indian Bank is also trading at day's low. From the private banking space, Axis Bank has lost 2%, and your heavyweights, HDFC Bank and IndusInd Bank, have also seen some cuts. And remember, all these stocks are currently trading at day's low. Mr. Mehta, the valuations definitely for most of these banks do appear to be cheap right now, but do you think all the negatives are priced in and one can look at making a fresh investment from a longer term horizon into the banking pack?
See, I think banks in India cannot be all painted with a single brush. So we have many classifications. We have the PSU banks, we have the old private sector banks, we have the new private sector banks, and then we have corporate lenders like ICICI and Axis. So each of these classifications or segments have different growth rates and have different prospects going forward. And specifically about PSU, I think valuations may appear to be cheap, but there are many legacy issues surrounding the PSU banks. And although one cannot rule out a turnaround in PSU banks, considering that they may have entered oversold territory, and any whiff of positive news also could lead to short covering and a quick and swift upswing in their stock prices. But from a long-term perspective, 3 to 5 years or so, the investor has to be focused and invested in the new generation private sector banks, the likes of say HDFC, Kotak, Yes Bank, IndusInd, RBL and DCB, which remain as consistent and secular growth stories, gaining market share at the expense of the likes of ICICI, Axis, old private sector as well as PSU banks. So I think the core holdings have to be the new generation private sector banks, and of course I think traders can keep on dabbling in the likes of Axis or ICICI or the PSU banks, depending upon news flow, depending upon price volume action, and I don't rule out a trading bounce in these companies, but from a long-term investment I don't see great prospects for any of the banks except for the new generation private sector banks.
Well, Dipan, thanks so much for putting all of that into perspective. Really appreciate you taking the time out and being with us today on Bloomberg Quint.
Thank you.
So from Dipan Mehta, the takeaway, he's not bullish on IT by and large, save for Tata Elxsi, and an interesting view on banks as well. Banks is the focal point really. Actually, just before we get into our technical experts, because I think Navneet was right, there's a bit of a shake-up in how the markets are doing after last 9 days of we being used to the markets picking up steam in the last half an hour, 1 hour of trade. Today we're seeing quite the reverse. There's a bit of a pullback. Nothing should be, there's no alarm bells here. It took a routine profit booking as well after 9 strong days. Let's wait and watch. But banks are the focal point. RBI Deputy Governor Mr. N.S. Vishwanathan put up a very spirited defense of the February 12 IBC guidelines. Speaking at an event in Mumbai, he said the central bank's action was to restore the sanctity of the debt contract more than anything else. Vishwanath Nair Johnson now with details. Vishwanath, fill us in.
So Neeraj, what N.S. Vishwanathan said essentially in his speech is that the problems that the banking system is facing today in terms of the high NPA was a direct result of more than 20% growth that the system witnessed between 2006 and 2011. So banks were giving out loans that they shouldn't have been giving out to corporates that should not have received those loans, and that is how we ended up in this situation. And talking about the February 12th guidelines specifically, he said that a lot of the criticism against the February 12th guidelines was probably unwarranted. One point, especially on the one-day default, that is something that has been a point of discussion amongst bankers, corporates, as well as the government now, saying that is it necessary for banks to count a one-day default and then spring into action whenever a company defaults on its loan. According to the Deputy Governor, a default essentially is a lagging indicator of the stress in a company, which means that the stress precedes the default. So which means that banks should have been more careful. They should have been more, monitoring the loan better in a way so that the default should not have happened. Now that the default has happened, they should spring into action and start to turn around the company and, set this whole thing straight. Another question that was also raised was about the 180-day resolution period, because in the new guidelines, it says that within 180 days, the whole default needs to be set straight. The company needs to come back into a repaying company. What the Deputy Governor says is that people think that this is too short a period of time, but according to him, it is completely fair that the bank should have been active before this whole thing happened, and within the 180 days, it should be possible for a company to come back into a repaying form. Also pointing out that in the previous guidelines, there were a lot of restrictions that was placed on bankers on how they could restructure the loans. But in the new set of guidelines, it gives bankers full freedom as to how they want to restructure the loan. They don't even have to meet in groups. They can decide for themselves as to what fits according to their risk profiles and risk policies. So, all in all, it was a great defense of this February 12th guidelines, which is currently under debate, not just from the banker side, but also from the government, with the government asking questions in a parliamentary committee. So, this is probably an indicator of what the RBI stance on the whole matter is.
Very interesting. He spoke at length, I think, about a bunch of other issues as well, Vishy, about PSU banks and what they should be doing, etc., etc. So a bit of a chat out there too, if I'm not wrong.
Yes, that's right. So a number of issues on how public sector banks function, as well as what happens in the corporate governance associated with those public sector banks. All of these issues were also discussed in the speech, but the main point of the speech was still the February 12th guidelines.
Of course, I mean, I'm not taking away that main point, of course. Yeah. Which is why we thankfully had you to speak about this, Vishy. Thanks so much for putting that into perspective. Banks clearly remain the center stage, about 200 points now down of the Nifty Bank. Ruchit, come in here. Nifty Bank, the kind of fall that we've seen, I mean, would you take a fresh trading position on the Nifty Bank? There is also the weekly expiry tomorrow.
So I think if I have to take a call, then it would be on the short side itself because of the resistance around 10,400, 450 that we had seen coming in. And also, as earlier I said that even in Nifty, we believe that the upside now seems to be very limited. So I think, yes, in case if we see this corrective move, then Bank Nifty should take the leadership, and just for a day or two, we should see some sort of corrective move up to 24,800, 24,900 kind of levels.
Hadrien, what about you?
Yeah, so as we've already spoken, the banks are turning out to be a laggard, and I think if we are going to see the Bank Nifty closing below the 25,200 level, that is also the low of the hanging bank pattern that we've seen on the daily charts yesterday. That's going to raise alarm, early alarm bells for any long trades at the current moment. So I think that would actually qualify for a bearish engulfing pattern on the daily charts, preceding the hanging man, which is not a good sign. So I think one needs to be a little cautious. Long trades should actually go ahead and book profits, and brave-hearted guys can actually go and even short the Bank Nifty below 25,200.
Okay, Hadrien, any view on Godrej Consumer? That's hit its 52-week high in today's session. It's one of the top gainers among the FMCG pack. Oh,
that's a flyer. In fact, the stock has hit all-time highs, and along with that, we've also seen a very good consolidation breakout, which also further accentuates our bullish stance on Godrej Consumers. So I think the volumes as well as the relative strength that we are checking on the charts are really showing that this current momentum would really go ahead. I think I wouldn't be surprised if we could see Godrej Consumers hitting the 1200 mark in the near term.
Okay, Godrej Consumer, in fact, hitting its all-time high levels in today's session in the last 3 months too. That stock's given you returns of almost 10%. Markets are trading in the red right now. Bank Nifty is down over 200 points as we speak, and Nifty is trading around the mark of 10,534. We'll slip into a short break here on Countdown. Don't go anywhere. On the other side, we get you the Fab4 stocks of the day at 3:15 p.m. We also tell you what the dealing rooms are recommending in trade and some closing strategies from our technical experts here. Stay tuned.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with Countdown right here on Bloomberg Quint. About 30 minutes left for the markets to wrap, and we aren't looking at pretty scenes while the rest of the world seems to be okay. There's some profit booking, I think, coming in. Again, I repeat, no alarm bells, but we have a bit of a pullback that is coming about in the Nifty Bank. I reckon private banks too are amongst the stocks which are going down in the session today. Axis Bank amongst the principal losers, down about 3%. IndusInd Bank about 1.5%, and a few others. So for the benefit of the viewers who are tuning in right now, it's the Nifty Private Bank Index. In fact, that will come up on your screen. That's the principal loser, the Nifty Private Bank Index, down about 1%. And that's what's leading the Nifty Bank 2 to come off the way it is. So, okay, before we move any further, with our experts, let's get in Yash Upadhyay, who joins in with the Fab4 stocks of the day. Nothing too damaging to the Nifty, so I'm sure there are enough and more movers. Yash, what's standing out though?
It's quite a diverse Fab4 today, actually, Neeraj. So first of all, let me talk about the IT name that is there on a Fab4, Virinci Limited. This one had gained as much as 13% today after signing a 5-year multi-product deal with Advance America for an undisclosed fee. Now, the company in its press release says that the deal is largely EBITDA accretive and that 40% of the revenue from this contract would be received in the first 1.5 years.
CLSA came out with a report on the FMCG sector. Dabur, being one of its top picks, saw its rating getting upgraded to a buy, and the target price too was revised higher to 415 rupees. Now, a combination of higher MSP and a forecast for a normal monsoon for a third consecutive year is likely to see the rural growth outlook improving going forward. Sequence Scientific at one point was up as much as 4.5% today after the company said that its Irish subsidiary had acquired an animal health company in Germany called Burma Pharma for an undisclosed fee. And now the company says that the deal is a positive for them as it consolidates its position as one of the leading animal health company in the European Union region, which contributes to more than half of their revenues. And finally, something like a Sudarshan Chemical, it has been buzzing on the back of heavy volumes, is the fourth straight day of the stock being up and has gained as much as $100 in that period. Volumes too coming in significantly high at well over 12 times the 20-day average. Back to you.
Interesting names, some of those. Thanks a lot for that, Yash. I think both me and Navneet were speaking about some of these chemical companies. Sudarshan Chemicals. Oh, by the way, sorry, I'll just deviate a bit. The Nifty's now come off about 1/3%. The Nifty Bank down about 1%, yes. The Nifty's come off. It's a very swift pullback that we're seeing in the last 4 or 5 minutes of trade. The intraday of the Nifty Bank will show about a 70-point downtick in the last 5 minutes, to be honest. There's a sharp slide that has happened in that time frame as well. And the Nifty too has come off a little bit from those levels. Aside of banks, I think the intraday of HPCL looks very interesting. Just look at that slide that we're seeing in HPCL, and it continues and it's only gone further down and trading currently at the lowest point of the day. Ruchit, OMCs were under pressure for the better part of the trade today. Now all of them trading at the day's lows. Can somebody initiate a fresh trade here on the OMCs?
So Neeraj, if we see last 3-4 months, then all the three OMC names have been forming this low top low bottom structure. And with today's down move, the recent lows have also been breached, which is an indication of the continuation of this low top low bottom which we have been seeing. The last 4-5 days already the prices have corrected, so going fresh shorts over here would be a bit of risky bet. But still, if anyone has to take a trade, then HPCL I think could be shorted with stop loss about 330. The target on the lower side would be somewhere around 302 to 304.
Okay, that's the view coming in on the oil marketing companies. The other stock which was up in yesterday's session, Jet Airways, that's given up its yesterday's gains of almost 4 to 5% now. Hadrien, on the charts, if somebody had taken a long yesterday, should they be cutting it off?
Yeah, absolutely, because for the sole reason that it is actually approaching its 200-day moving average and it is unable to break past those levels, and that was close to the 650 mark. So I think as long as that 650 is not broken, it's going to be very difficult for Jet Airways to move forward from here on. So I think long positions should definitely book profits if they hold on, and one can keep a stop loss of close to 650 on a Jet Airways, and even go ahead and short and play for a target of close to 600.
Okay. Next, bring up Titan on the screen first. The stock price, that's down about 2% today. You could argue that it's the Morgan Stanley note which could have led to this as well. But I just want to zoom in on my laptop. This is a story that is there on the Bloomberg Quint website as well. And this is Titan's performance on Akshaya Tritiya. You look at, so this is the mean line. Yeah, this is the mean line. So all these returns are the returns that have come on Akshaya Tritiya days. In the last 10 years, save for 3 small gains, which are the top 3, all the lower 3 are levels or days wherein Titan has fallen. This is a story filed by our producer Anirudh, and he's noted this chart wherein he's saying that Titan typically tells to fall on Akshaya Tritiya days. As strange as it sounds, but that typically tends to happen on Akshaya Tritiya days, wherein Titan does correct and correct quite a bit compared to how it does on the gaining side. So that's really the interesting part about Titan. Having said that, I believe today's session could well have been, today's fall could well have been a result of the Morgan Stanley note as well, where they've just turned cautious.
Yeah, and some bit of profit booking. The stock's been outperforming, but I'm sure the shareholders of Titan who have held the shares for last 1 year, they would be happier than somebody who was having physical gold in the...
Yeah, but not strictly comparable, you would guess. But yeah, I think Navneet made an interesting point too. Siddharth Sedani, Vice President of Equity Advisory at Anand, Rathi, is on the show as well. Siddharth, good afternoon and thanks much for joining in. What's the view on Titan? It's been one flyer, if I can borrow the term from Hadrien. It's done really well across time zones. In the last 1 year, especially so. But are the valuations at whatever times, I think the terminal speaks about some 70, 72 times. Are these valuations just absurd? And do you think there is room for the stock to correct a bit more?
Good afternoon, Neeraj. Thank you for having me on the show. Well, we talk about Titan, then the point comes a consumption play. Today correcting, maybe it's Akshay Tritiya then and people are too much bullish on the stock, and that is why the stock may have been correcting. But overall perspective, this is a consumption play, Titan being the leader in the jewelry space and really operationally doing fabulously well, and especially after the demon. The branded jewelry space has been doing good, and we know that Titan is the leading one. So on that consumption play, valuation doesn't matter. Overall perspective, most of the consumption play, whether you talk about consumer durables, whether you talk about FMCG, whether you talk about any other space in the consumption, it is quite steep in terms of valuation is concerned, but it is what growth people are chasing, because you don't have many more stocks in the market where continuous growth has been coming, and Titan is one of them, and expectation on Titan's growth is also quite high. So valuation doesn't matter, although we don't have a coverage on the same, but I think being the leading player in the jewelry space, it's a good stock to own. It's a portfolio stock.
Interesting. Navneet.
Okay, that's the view.
2% down, yeah.
2% down, yes. Hadrien, would you buy on dips, Titan?
Yeah, I would definitely buy on dips, but you know, we're seeing a divergence on the chart. If you see the previous high of almost 964, we saw the RSI actually jumping to 80, but now when you saw the stock hitting 1000, RSI actually jumped down to 74, so that's a clear divergence, and I think you know, the parameter is actually saying that it's time to book profit. So right now you book profit, but you know, a dip towards 950 would definitely be an opportunity to once again jump the bandwagon and you know, trade this gem. Absolutely.
Siddharth, we'll be getting the numbers of ACC today. Any expectations from the cement pack this time around?
Well, ACC can be a mixed bag. Realizations may take a hit. Overall perspective, it would be a mixed bag number. Of course, the revenue may see a good jump because of better dispatches, but overall perspective, it would be mixed bag in number. We don't cover ACC. But in the entire cement space, the two preferred bets which we have currently with us, one is one of the large cap plays like of Dalmia Bharat with a target of 3600. We believe here the numbers will be flowing in well. The stock is subdued maybe for a month or more than that because of as we know that NCLT controversy and Binani cement and all that which is happening through, which is an overhang for the company. But I think any which way, if it goes through also, there is nothing to lose for Dalmia Bharat, and if it gets Binani, then I think of course the capacity will be there on stream for the company. So Dalmia Bharat in the large cap space looks very interesting to us with a target of 3600. Here the numbers will be quite good, followed by Heidelberg Cement, which is again an MNC play, Central India placed company. Central India, one thing which we have observed through our channel checks, that 15-20 rupees increase in cement prices has been observed. So Heidelberg Cement with a target of around 189-190 looks very interesting in the mid cap cement place.
Okay, so the numbers from ACC may not be a mixed bag of numbers is what Siddharth is suggesting. I guess the realizations could be under pressure because of the cost pressures that the entire sector has been facing.
The first of the companies off the block,
yes.
So it'll be interesting to see what.
I think even in your chat with India Cement, the management highlighted the pet coke and the coal prices were.
Yeah, I think he did that.
Suppressing the margins for these companies.
Yeah, but it'll be interesting, Navneet, purely because of the India Cement's chat that we had. That'll be very interesting to see what ACC has to say. But anyways, we'll move to that in a bit. For now, it's 310. Let's get a sense of if there are stocks that could enter or come out of the F&O ban. Tomorrow could be a fairly volatile day as well. A lot of result reactions. We expect 3 companies to come out with numbers anytime from now until tomorrow morning. So those 3 plus a bunch of other stocks that have reacted today on the back of the volatility that seems to have come back a bit as well. What's the list looking like?
Just one stock, Neeraj, and this series, I must say, there were very few stocks which were in the ban period. Next week, remember, we'll have the April series also expiring. So watch out for Jet Airways. That counter was quite active in yesterday's session, up almost 5%. It's given up its gains in today's session, trading with cuts of 4%. If you look at the total open interest as a percentage of market-wide position limit yesterday, it was almost 91%. For a stock to enter into the ban, it has to breach the 95% mark. And if you look at today's action, even on the future side, or be it couple of option strikes for Jet Airways, it seems like it may just breach the 95% mark for tomorrow's session. But remember, the trends do change in the last 15 minutes, but definitely watch out for Jet Airways for tomorrow's trade.
Okay, do watch out, and had some fabulous activity. The numbers, by the way, on the aviation data has been fabulous as well. Actually, just before you get to what dealers are recommending in the session today, Siddharth, come in on the aviation stocks, the monthly data that came out, and the performance from Interglobe Aviation, which continues to be as stellar as one can expect.
Of course, the entire aviation space has been buzzing. Some kind of a volatility has been creeping in the entire sector on the back of course, the volatile crude oil prices. But if I bring it in a nutshell, I would like to go with SpiceJet rather than any other company. Of course, the industry has been growing overall perspective in terms of passenger traffic growth is concerned. But SpiceJet is one of the beneficiaries of that. Apart from that, the cargo business of SpiceJet is also seems to be doing good. So, and of course, the regional connectivity which the company would be getting in coming quarters is concerned. I think SpiceJet looks very interesting. Although our target is 150, very close by, but we believe SpiceJet is the one player which one should look at.
Okay, maybe look at SpiceJet fundamentally is what Siddharth Sedani is saying. What else? Trying to figure out companies which have been either gaining or losing in the last few minutes of trade. So on the index, of course, Bajaj Finserv has come off ever so slightly from the levels that it was trading at. But I'm looking at Shoppers Stop come back. Shoppers Stop come off a bit in the last few minutes of trade. A bit of a sharp pullback that we're seeing in that stock. Persistent coming off, Symphony's come off, and I already spoke about Bajaj Finserv. This one has come off as well. So there's 3 or 4 names out there. I think HT Media too has had a bit of a pullback in the last few minutes. Ruchit, any of these stocks on your radar? Shoppers, Persistent, HT Media, maybe a Symphony?
No, nothing from this space, Neeraj. Specifically, if we see the Shoppers Stop was one of the stock which had shown a decent outperformance in last few trading sessions. But now in today's trading session, we have been looking at this. Some sort of profit booking seems to be in place. 550, 555. I think that would be the range to watch out for in Shoppers Stop. Maybe next 1 or 2 trading sessions, if we get around 550, 555, those would be levels where again one can look to re-enter with fresh long positions.
Okay, that's the view coming in on all these stocks. Shoppers Stop currently trading almost at day's low. Well, it's time to look at what the dealing rooms are recommending in trade, and to take us through the same, Yatin Mehta joins us. Hi, Yatin. Good afternoon.
Thanks for that, Navneet. It's a lackluster day of trade. In fact, in the last 1 or 2 trading sessions, we have seen markets remain in a range, and not really much happening on the volume front, on the market activity front. But in terms of recommendations, watch out for Tata Global Beverages. This is one stock wherein dealers are recommending this as a buy in the short term. They're expecting a 10 to 15% up move in the short term, and hence they're talking about Tata Global Beverages coming up on the list as buy. Also is ITC, and in general, FMCG stocks are doing well. ITC has made a move. Of course, the hotel stocks are moving nicely. If you look at the key raw materials for companies like ITC, wheat, milk, all of these prices have come down. Probably this will help them aid their overall margin. So on the back of that, decreasing raw material costs and improvement in their core cigarette business and the hotels business, ITC is something which is currently focused by the dealing rooms as well as the domestic funds. And SRF, this is one stock wherein dealers are recommending a BTST kind of a strategy. They expect the trading momentum to continue as far as this chemical company is concerned.
Yeah, well, the rally out there, no, I'm just saying the rally in SRF continues unabated. Even on a weekday like this, that continues to rise and shine. Siddharth, what are you guys telling your clients? Jatin, thanks a lot for getting us that perspective. Siddharth, what are you telling your clients to do in the specialty chemical space? I mean, Navneet was speaking about Sudarshan. Jatin spoke about SRF. I was just looking at the kind of gains that some of these stocks have shown in the last few days. They are popping up on the trading screen in a meaningful way. What do you like within this pocket and why?
See, we have 2-3 plays in the specialties chemical space, Neeraj, but one of the play, if I want to pick and choose, would be Deepak Nitrite. Of course, we have a higher upside with a target of 346. Well, Deepak Nitrite is a specialty chemical play, niche specialty chemical play. Is planning a chemical which is the new plant which is getting commissioned maybe in a month or so in the Dahej of acetone and proton. This acetone chemical is something which is 90% imported in our country with a heavy import duty, anti-dumping duty of 7.5% by the government. And there are 7-8 sectors which consume this chemical. We believe this they are coming up, Deepak Nitrite is coming up with a big capacity in this Dahej, Gujarat. So overall perspective, there would be good acceleration in terms of revenue for the company is supposed to happen. We believe that revenue can double also in FY19. Margins are expanding, overall operational efficiency is happening to be good. Deepak Nitrite looks very interesting to us in the specialty chemical space, in fact with a target of 346.
Okay, Deepak Nitrite from the specialty chemical space is what is being suggested by Siddharth. Ruchit, a word on Pidilite, a company which has been hitting fresh highs almost every day, and this is a stock which has been going up in the last 10 to 15 trading session. The gains could be restricted to 1 to 2.5%, but yet every day it's been inching higher. At current levels, if somebody would have taken long positions, let's say 10 days back, should they be booking profits?
Navneet, the last few days, as you said, the up move is quite significant, and considering the volumes also that have been supporting this up move, I think this trended move can continue going ahead also. Now, the best strategy for the existing long positions who have taken at the lower levels would be to follow trailing stop loss method, wherein as the prices move higher, you keep revising your stop loss on the higher side as the supports also move higher. At current prices, the support is now placed around 995 levels. So for existing long positions, one should keep a stop loss of 995. And then as the prices move higher, they should continue to trail their stop losses higher. Fresh long positions, no, it's not recommended to enter now because after this significant move from 880 to 1050, the risk reward ratio won't be favorable from a trading perspective. So it's not recommended to enter fresh longs, but existing long positions should continue to hold with stop below 995.
Okay. Closing strategies as well. Hadrien, if you had to choose one trade, either the index or a specific stock from tomorrow's for tomorrow, what would you choose, an index or a stock, and which one is that?
Yeah, so as far as stock is concerned, Axis Bank has really, broken off. It is first of all broken off the long-term 200-day moving average. Secondly, it is also broken down from this congestion zone. So I think that is something that is not good. Any long trader wants to see on any stock he's holding. So I think one can initiate a short position on an Axis Bank, and won't be surprised to see Axis Bank coming down to even the 500 rupees mark. That's where the immediate support is lying for an Axis Bank. So definitely go short on an Axis Bank.
This is a short-term trade for tomorrow.
Absolutely.
Okay, a short trade on Axis Bank. That's Hadrien's top call. Ruchit, I'm asking you maybe for one or maybe one more, but if you had to choose, the same question to you, if you had to choose one trade, either on the index or on a stock for tomorrow, which one would that be?
I think the way this media stocks, specifically both these names, Z and Sun TV, have been showing strength, I think even in tomorrow's trading session, we should see continuation of the up move, irrespective of what we see in the index. So I would again recommend Z Entertainment, although earlier levels I had given from a short-term perspective, but if I have to strictly see it from a BTST perspective for tomorrow's trading session, keep a stop below 581. We should see levels around 605 to 607 in tomorrow's trading session in Z Entertainment.
Interesting. A buy call on a day when actually not doing too bad. The Nifty Bank has recovered a little bit of lost ground as well. So that's interesting. Let's talk about some fundamental ideas. Siddharth, for somebody watching the show right now, wondering whether or not, or wondering where to invest in a scenario like this, what would your recommendation be?
Well, one thing which is constant in 2018 is that quality companies with good fundamentals, good management will only show a good performance. Any and every stock will not give you good returns in 2018 because it's basically till now it has been proven as a volatile year. In this condition, on the back of official data which Met department has given on monsoons, I think agriculture space seems to be as the major highlight. Out of that, DCM Shriram we believe is a one stock which can give a good return in medium to long term perspective with a target of 745. We can see around 70 to 75%, 70 odd percent upside from the current levels. Today's also stock is little higher. DCM Shriram, basically the 35-40% of the business comes from the agriculture space, 25% from the sugar. The rest of them are chlorovinyl and some other businesses. So it's a diversified company. DCM Shriram, strong parentage, strong parent background of the company, 7,000 crore market cap of the company. So it's a decent sized company. Valuations, if we talk about it, is around 9-10 times FY19 earnings. Overall, we believe 1200 odd crores expansion is also there in the existing set of the businesses. Revenue can shoot up around 18-19% for next 2 years. That run rate can continue. Margins are also expected around 15-16%. So overall, in nutshell, at 10 times FY19 valuation, a company which has not performed in last 2-3 months. In fact, it has come down. It was subdued also. So at the current situation, current price, it seems to be a value pick. With a target of 745, we can expect around 70 odd percent return in a year or so. One can buy on the back of monsoons, agriculture. I think it's a good theme to play.
Well, and the stock's also up in today's session. It's trading with gains of nearly 5%. That's a fundamental pick coming in from Siddharth Sedani on DCM Shriram. Just want to mark few stocks. JP Associates, remember that's the one which is in the F&O ban, has surged. That's trading with gains of nearly 7 to 8%, almost a day's high rather, close to 9% gains there. Pull up V-Guard, the intraday chart of V-Guard. That's seen some gains coming in the last 15 to 20 minutes of trade and almost a day's high. V-Guard is now sitting with gains of 3%, and also something like Amara Raja Batteries, that's also seen some buying momentum in today's trade, up almost 4% at day's high for Amara Raja. Hadrien, anything on the charts for V-Guard or Amara Raja?
Yeah, V-Guard is looking pretty impressive the way the stock is moved. In fact, it is broken out from the symmetrical triangle pattern. I have just done a chart check on it, and I think if we manage to hold above the 230 breakout zone, I think V-Guard is something that looks very interesting with a medium-term perspective, because it's trading pretty close to its all-time high, and if we close above 230 on a weekly basis, I think that's one stock that one can really consider if you have a medium-term perspective. So V-Guard is something to watch out for.
Okay, Ruchit, would you advise carrying home longs in Dabur, which has done well in today's session? It's almost up nearly 3.5 to 4% in trade.
Definitely one should continue to carry long portions in this. We have already seen a corrective move which had taken support near its 200-day moving average, and the move now in today's trading session have also been backed by a very high volume. So I think the stock should head higher in short term towards its January high, which was around 368, 369. So next 1 or 2 trading sessions itself, I think we should see levels around 368, 369. So one should definitely hold on to the existing long positions.
Okay, hold on to the existing long positions. DB Realty, remember, this is the stock which was going up in the last few sessions, has seen some bit of profit booking. That's seen cuts of nearly 8% at day's low. So that, before we let you go, a sector which has been in focus for the last 2 trading sessions is the hotel space. We spoke to the CFO of Royal Orchid, who confirmed that the occupancy rates in the sector have been inching high. In fact, their occupancy rate is 75% vis-a-vis the industry rate of 70%. Anything in this space which excites at current levels, considering this is the space which has not performed for the longest time now?
Of course, this sector happened to be a tepid and subdued quarter for a long time now, and average room rent ARR is going up In fact, the capex is coming down, the addition of new rooms. So of course, by next 2-3 years, we may see a strong jump in terms of the demand for the rooms in the entire hotel industry. We don't have a particular coverage in the industry. We used to like Mahindra Holidays at a certain point of time, and we played out that story. But overall perspective, I think if someone wants to stick, as I mentioned in my previous answer itself, the quality companies only will play out in 2018. So quality in the entire space of hotel industry is Indian Hotels. Taj Group of Hotels, I think this company has been also subdued for many years. I think this company being a leader can be there in people's portfolio. I think this is a good company to own.
Okay. That's a positive view coming in on Indian Hotels. Siddharth, appreciate you joining us today and taking us through your views on the markets. Well, just few minutes for markets to close now. Let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, finally, we've snapped the 9-day winning streak.
Yeah, well, it's not something which is pretty from a bull's perspective, but maybe realistic, really. You can't have the trees growing all the way to the sky. But yeah, flattish day, nothing too untoward. Nifty Bank, a bit of a pullback coming in, but again, nothing too bad. I think the market breadth would have worsened a bit in the second half of trade. Let's pull up the mid-cap and the small-cap indices on the screen as well, and you will see what's happening there. About 1/3% down for the small caps. The mid-caps, absolutely flat. I haven't seen such a flat mid-cap index in a long time, 0.01% or thereabouts. It'll change a little bit in the last couple of minutes of trade. But let's look at what were the factors that were driving the moves today on all the key indices. So ITC was the man of the match, to be honest, 3.5%. A lot of talk about how it is undervalued, the input costs are going down. So if HUL can trade at the valuations that it is, why not ITC? That stock moving up today. Some strength in Wipro, Bharti, Tata Steel. But again, you can see the defensive bent. NTPC, HUL, ONGC, Power Grid marginally in the green. Just shows what the market is looking at. And on the losing side, private banks. So Axis, IndusInd Bank, ICICI Bank, Kotak Bank, HDFC Twins, all of these down. Reliance marginally off in trade, but had to be the Nifty Private Bank Index really, which led to the indices doing what they did today. It dragged down the Nifty Bank, which in turn dragged down what the Nifty and the Sensex. The mid caps and the small caps, I think as an index have done okay, Navneet, but specific movers and a clutch of those stocks out there.
That's right, Neeraj. Couple of themes which have been working out in the market like today's. Hotel stocks, they've been up for the second straight session, something like Taj GVK, which did close off today's high. But remember, that stock also touched its lifetime high levels in today's session. Taj GVK was up in trade. Also, Archie's, that saw some buying momentum today from the broader markets. That stock registered some bit of gains. Besides that, the chemical stocks, which we've been mentioning in the last 3 to 4 sessions, how they've been inching higher. So Sudarshan Chemicals was the one which gained from that pack on back of very, very high volumes. So definitely watch out for the delivery data for Sudarshan Chemical. From the consumption space, you had Dabur. That stock did well. There were some fresh long positions being built up, almost closing around the day's high mark. And also Godrej Consumer, that touched its all-time high levels in today's trade, one of the top gainers among the F&O securities as well. In the last half an hour of trade, Amara Raja Batteries also went up. That registered gains of almost 3 to 3.5%, closing the days at day's high. On the flip side, stocks which did not perform well from the Nifty PSU banking pack, the top loser was Bank of Baroda. So watch out for that one. DB Realty, a counter which was going up in the last 2 trading sessions, succumbed to some selling pressure, call it profit booking in today's session. So DB Realty closing around day's low level. There are a lot of bulk deals which have been seen for something like Quality in the last 2 to 3 trading session. And Quality, if you look at the counter today, once again closed at day's low. And Triveni Engineering, that also came under selling pressure. That's the counter which also touched its fresh 52-week low today.
Well, so all in all, not a bad day of trade, just that we've been used to gains in the last 1 hour, as I said at the start of the show, and we didn't quite see that. So, in fact, a bit of a mirror image. We came off in the last 1 hour of trade. The market breadth, and let's see if that worsened a bit towards the close. Yeah, it did. Quite a bit of a yawning gap, to be honest. So that's one thing. I don't know, the turnover, Navneet, should be interesting, as also the contributors list, but the turnover. There you have it.
It's gone up if you compare it to the last two trading sessions, especially for NSE F&O turnover. And the way, Neeraj, the bank nifty fell in trade, it speaks volumes considering tomorrow is also the day for the weekly options expiry to contract. But I guess the cash turnover has just been about muted in the last few sessions.
Yeah, it'd be interesting to see what the positions from the FI side as well on the Nifty Bank or the Nifty were at close. And right here, Navneet, again, now we've seen this, yesterday we were talking about this defensive mind, Wipro at best a defensive name, ITC kind of like that, Ultratech okayish, and the high beta names have come off in the session today. Banks were the only culprit.
That's right, and had it not been for something like ITC, which is a heavyweight, I think we would have fallen even further by 16 to 17 points in trade.
Yeah, interesting. Okay, final thoughts from our experts. Ruchit, how does this set us up for trade tomorrow or the near term?
I think in near term we should see some sort of range bound activity in index, but as the index approaches the higher end of the range or resistances, which I earlier said, which is around 10,580 to 10,640. This would be the range where all the positional long positions from a trading perspective, which had been taken at lower levels, you should start booking profit over here. Although there are no signs of reversal where so we are not advising to create any kind of short positions, but 10,580 to 640 would be the range. I would again say that in this range, traders should definitely look to exit from long positions.
Hadrien, do you concur with him? Is it time to book out from long positions?
Yeah, absolutely. It's time to book out from long positions, at least in the near term. So that also on the Bank Nifty, 25,200 is something that we are watching out for. And we have closed below that. So, this actually tells us that we are seeing a bearish engulfing on the Bank Nifty. So, I think that's not a good sign. So, in the near term, I think definitely one should be a little cautious. And, as long as we see Bank Nifty breaking about 25,500 convincingly, I think, we'll have to wait and see whether that happens. If that happens, I'll definitely be aggressive long on a Bank Nifty. But then till then, I think cautious should be the trade going forward.
Well, 400 points away from that 25,500 mark that Hadrien is talking about. Ruchit, Hadrien, gentlemen, many thanks for joining in today and giving us those thoughts. But with that, it's a wrap on this edition of Countdown. Up next, we'll get you a complete wrap of today's trading session on Bloomberg Quint's Market Wrap. And a bit later on, the Mutual Fund Show. Stay tuned.